Okay, so I believe this is video number 9, and hopefully we could get this done before my kids wake up, or else I'll have to start all over again. I hate to do that, but anyways, let's give this a shot. So like I said, we sort of completed our adjusted trial balance, but one of the problems with that is that, how do you know what income tax you want to book? So you really don't know. So you sort of have to prepare. You don't have to do it formally like I'm going to do it here. You could do it on a scratch piece of paper, but you sort of have to prepare, sort of an income statement beforehand, just so that you could book the proper taxes. So let's do that. Sales revenue is sales revenue. Where's my sales revenue? Around here. Sales revenue is 48,000, right? And we have another type of revenue, which is interest income. Okay, so now let's start creating our income statement from the expense side. Let's go to cost of goods sold. And where can I find cost of goods sold? Right here. Cost of goods sold is here. Salary expenses here. Supplies expenses here. Rent expenses right here. And utilities expense is right here. I'm sorry. Utilities expense is right here. Interest expense and depreciation expense. Okay. So this is a very simple income statement format. There's various types. There's a multi-step format, which we'll talk about a little bit later. But right now, I just did this. This is how I'm going to prepare it and present it. So now I can calculate my taxes, right? So let's say I calculate my taxes based on 40%. So I'm going to go here and I'm going to go this number times 0.4. And 1447 will be the tax that I want to enter as an adjusting entry, which is going to be my last adjusting entry. Accrue for taxes, right? Which is missing. So let's go back to the journal and let's accrue the taxes. Income tax expense. I guess I didn't write that down, so it's going to be 1,447, right? 1,447. 1,447. I call it income tax expense here. You'll notice that in the ledger, I call it, what do I call it? Provision for taxes. So don't worry, these are just terminologies. As long as it makes sense, that's all that counts, right? So 1,447, and that was in GL 58, which I forgot to write down here. So let's write down GL 58, and income taxes payable 1,447. Income taxes payable. Interesting that, okay, I didn't create the income taxes payable account here. I should have created it, so it would be something like this. Copy, paste, and we'll make it number 27. 27. And we'll call it income taxes payable. Income taxes payable. Okay, sorry about that phone ringing. As you can see, I'm doing this from home. So income taxes payable 1,447, that would be a liability 1,447, right? And that would be GL number 27, so we could put 27 right here. Okay, so now we can do our final entry over here, which is quite interesting that I didn't, K22. Oh, I see why it didn't record there. Okay, 1,447. That's supposed to go there. That's why. delete. Okay, so the 1447 goes in the trial balance, and now it still balances, right? So now you have a complete unadjusted trial balance, and guess what? You already have a complete income statement. So you've already learned how to prepare your first major statement, the income statement, right? So you're on your way to becoming a full accountant. Let's prepare the next major statement, which is going to be the balance sheet. And the balance sheet is also going to be fairly easy. All you have to do is take the balances from your accounts here, right? So cash is 348. Let's see if this works by simply copy pasting down. If I copy paste down, well, I don't think, hold on for a second. I think I used the wrong cell. Okay, if I go 340, okay, cash is 348, and if I copy paste down, hopefully all my accounts will be properly. Accounts receivable was 15,000. Inventory 22,000. I'm sorry, accounts receivable. Okay, so I sort of switched these around. Not very good. Okay, so we want accounts receivable to be 15,000. I see. That's the problem. I don't have it in the same order. It's not, a big deal. Short-term investments was 50,000. So the whole copy pasting thing didn't work out for me. Inventory is 22,000. Supplies is going to be equal to 1,000. That's my supplies. My prepaid rent is going to be equal to, prepaid rent is 22,000. And interest receivable is going to be equal to 167. And these are current assets. They're short term. Down here I'll put the longer term assets, which is equipment of 80. And I'm going to go ahead and put the depreciation, but since it's on this other side, I'm going to put it negative, right? Because it lowers. Oops, sorry. I guess I don't have to put it negative. Well, let's put it negative there, and let's do it like this. Let's make this formula this plus this. Okay? And so that's the net book value of equipment. And so my total assets is 537,634. Now let's go ahead and let's do the liabilities. Liabilities as accounts payable is 60,600. Unearned revenue is 3,000. Interest payable is 417. Income taxes payable is going to be 1,447. And then notes payable, which is longer term, I'm going to, where's my notes payable? 100,000, right? And then common stock, we need to put the common stock account here of 400,000. And so we are sort of done. So let's take a look at this. 537,634, 565,464. It doesn't match. So there's a problem there. Okay, so as I was saying, so we have a problem, right? They don't match. But do we really have a problem? No. Let's remember we have not done our closing entries. And what does our closing entry involve? Our closing entry involves two things. First, we're going to close net income into retained earnings, right? So this 2,170 needs to shift into retained earnings. And also you need to close your dividends account, which we have not done yet. And that is also a reduction in retained earnings. So I'm not going to do the closing entries. They're not part of the first test, but let me just put it in here to see if it matches. So if we close net income to retained earnings, what we do, and I explained this in the first or second videos, we take all the revenue accounts and we sort of put an offsetting entry here and we close them to 0 and we shift it all into an account called income summary, and then from there we shift it over to retained earnings. But the bottom line is that the net that's going to transfer once you close your revenues and your expenses is going to be equal to 2,170, which is the net income, right? And then you're going to close your dividends into your retained earnings. So you're going to put a credit into the dividends account to close it to zero, and you're going to debit your retained earnings. What happens when you debit retained earnings? That's a decrease in retained earnings, right? So we're going to decrease retained earnings by 30,000. 1, 2, 3. Okay, so do they match now? Yes, assets match liabilities. So now we've created a full set. We've created income statement accounts. We've created balance sheet. And we've created an income statement. And there you go. You have a full, well, it's not a full set. You know, we still have to learn how to do the cash flow statements. The statement of retained earnings I skipped. It's very easy. It's just a reconciliation of retained earnings from period 1 to period 2. But pretty much this is the whole accounting process. I'm going to stop the video here. I'm going to do one more video where I talk about analyzing how the changes between the first balance sheet and the ending balance sheet and income statement and equity, how we can analyze all that, because that's going to be a big part of the test. Okay, so I'm going to stop the video here, and I will do one more video in which we talk a little bit about analyzing the changes in balances and everything that we've learned. But as of right now, you've pretty much learned, if you've listened to all the videos, you've learned the entire accounting process. Like I said, excluding the creation of a statement of cash flows. But this is pretty much it. So from here, the most important thing would be now to learn how each individual transaction is recorded, because there's going to be some transactions that are a little bit more complicated than others, and that's not going to be part of this course. For example, how do we account for leases, and so forth and so on. But as far as the entire accounting process goes, you've pretty much learned the entire accounting process throughout these first 9 videos. Okay, thank you.